Now, as you can see, the shocks reverberated throughout the entire stock market. And today, in my trading 212 stocks ISA alone, I am down by so the day of reckoning has finally come to the stock market. The full list of tariffs have now been revealed. And the tariffs are actually a whole lot worse than what investors have feared. And as a result, we'll show you in a bit, the stock market has reacted violently. I just want to quickly go over the tariff list just to show you. These tariffs are very, very high. For example, China, the new tariffs are 34%. And if you guys didn't know already, China is a huge exporter, especially for the United States of America. They are a huge importer of Chinese produced goods, especially with the iPhone, where the majority of components are made in Chinese factories. You can also see that there are retaliatory, if that's how you pronounce it, tariffs from the other side. For example, China is imposing a 67% tariff to the United States of America. You can see Thailand is also hit hard, 36% and 72% the other way. But it doesn't just stop there, because even the United Kingdom, USA's closest ally, is hit with tariffs both ways, 10%. Now, as you can see, the shocks reverberated throughout the entire stock market. And today, in my trading 212 stocks ISA alone, I am down by 4%, or a loss of £4,220. How difficult is that to actually stomach? You can see that over the past month now, I am down by 9%, or a loss of £10,159. My biggest loss is over here. You can see my lump sum investment into the iShares Core S&P 500 is down by 9.62%, or a loss of £10,890. One of the hardest hit indexes or indices is the Nasdaq 100. You can see over the past month, it is down by over 13%. Now, that's not just where my losses end, because in my trading 212 invest account, as you can see, today has been a massive loss too, down by 3.8%, or a loss of £854. Granted, this is a smaller portfolio, but you can see here, I have 2,160 shares in the iShares Core S&P 500, and that is down by 8.17%. The worst part is that my average price, I bought it as the stock market was going down, and it's not even at the top of the market, but that's still down, this investment down by 8.17%, or a loss of £1,700 and basically £60. By the way, if you do want to sign up to Trading 212, the link is always in the description box down below, or you can go into the promo code section of the Trading 212 app and just enter my code JUBAIR2, so that way if you're new to investing, you want to try out Trading 212, you can get a fractional share worth up to £100. Now, even though we can admit to ourselves that this looks really bad, all red, we actually do have to zoom out and realize that this is just another blip in the market. As hard as it is to be in the red, at the current time, we have to realize that the whole point we did this in the first place, put our money aside, capital at risk, is because we do hope in the future the value is going to be a lot higher. And unless today's the day where you have to sell your portfolio, there really isn't much you can do apart from wait it out or take the hit. Now, one thing that's always very much confused me is why people flock to the stock market when the stock markets are at all-time highs, or they keep rising, months and months of rising, and that's when they start investing. And when stuff like this happens, minor corrections or even a stock market crash, people stop investing. A lot of YouTubers stop posting content, and that's definitely not going to be me. Personally, I see this as a good opportunity to reduce my average buying price. As you can see, my current average price on this ETF is £10.13. If I had more money to put into this ETF, then I can actually reduce this average buying price. And if it ever, I'm not saying it will, if it ever comes back to all-time highs, the values of the shares that I hold then are going to be, of course, worth a lot more, providing it does come back to all-time highs and then some more. But like I said, if you do zoom out, there have been even worse periods in our living memories. It was not that long ago, less than 3 years ago, where, the stock market declined for many, many months with no end to be seen. And then we had one of the biggest bull runs in recent history. Obviously, the stock market in the UK closes at 4:30, and that's why I'm filming after that. But you can see the S&P 500, at least for today, seems to be bottoming out, and there seems to be some hope at the end. Personally, if you ask me, I think there is still more room for the stock market to drop. Already, we've seen the past year performance going down to 4.8%. Basically, the entire past 6 months worth of gains has been completely wiped out. out. And I do think, there is room for it to go down more. Obviously, I'm not someone who gives out predictions, but of course, I would not be surprised if it goes down another 20-30%. And I'm bracing myself for that eventuality. Yeah, it does suck, having a portfolio size of £105,000 when the other day it was £116,000. But like I said in the beginning, I don't need my money right now. My capital is always under risk when investing. And the idea is that I can retire early, but not anytime soon, possibly in 20 years' time. And that is when I'm going to be worried about market crashes. And perhaps before then, I will diversify my portfolio and invest into bonds or things like that to reduce the volatility of the market. You can see the volatility has been incredibly huge over the past 3 months. You can see at one point not too long ago, before hitting £116,000, I was at only, £107,000. So really, the volatility is nothing new. One thing I did do that I'm happy that I have done that, if that makes sense, is making the most out of the volatility. You can see over the past few months, whilst the stock market was super volatile, I did have a go at trying to trade, and I did realize a lot of profit, made thousands of pounds worth of profit. So in that regard, I'm, happy that I did it, but it was also a risky move. And as you can see, you can't always time the market, right? You can see I bought this basically at the top of the market, and now I'm down by £10,000, £11,000. But I did have in the back of my head the conviction that the stock market might be overvalued, and that's why I was a lot in cash over the past few months. Am I upset that I didn't hold on to the cash a little bit more? Of course I am, but it just goes to show, what, timing the market, you cannot keep getting it right, because it is just like, trying to guess the numbers of the lottery. You might get some of the numbers right, but you're not going to get all of them right, are you? So in the future, the tariffs are going to cause the prices of basically everything around the world to increase, because the tariffs are being imposed by the US, and then these countries are also imposing tariffs on the US. And because of the way that, trade works around the world, it's just going to increase the prices of all the goods, although it will raise more money for the governments, and hopefully they spend it well. But as we know by now, increased taxes to the government doesn't necessarily mean anything positive for the average person, not necessarily anyway. If there's anything you can take away from this video, it is the redness does hurt, but eventually, hopefully, there will be some green and all will be forgotten. Because do you really remember what happened in April of 2022? I don't think so. So make sure to check out some of my other videos, and I'll see you in the next video.